once you've identified a stock that is either that's a good candidate for a breakout or a good candidate for a pullback buy, then the next thing you want to do is plan your exact entry, which is how exactly will you enter the day of the breakout and at what level. So every morning when you come into the market, within the first 5 minutes is when most of my entries are decided. And there are 3 possible scenarios that you could be facing. So the first scenario is where the stock gaps up. So take this one, for example, TGTX. This is a stock that I bought the day before, and this was the entry that I posted as I took it. So this is the daily and this is the 5-minute chart. And on the daily, we can see a gap up, right? Between yesterday's close and today's open, there's a huge gap. So if a stock is doing this and you still want to enter on it, how and when are you exactly going to enter? Well, you're going to enter on the 5-minute opening range high, ORH, opening range high. Now, what exactly is an opening range high? For the first 5 minutes, you look at the 5-minute chart. Here you change your time frame from daily to 5-minute, and you wait for the stock to make a range. This is the 5-minute range. It makes a candle on the 5-minute chart. This is the high of that candle. This is the low of the candle. What I do is enter when it takes out the high of that first 5-minute candle. So it basically breaks out of the 5-minute opening range. So this was my real entry, and I simply put the stop loss here, and I'll go into details about the stop loss when we come to that section at the end. So hopefully this is clear. Whenever you have a gap up in a stock and you're looking to enter it, you're going to enter on the 5-minute opening range high. Okay, now the second possible scenario is that your stock crosses the previous day's high or the pivot line, this resistance, within the first 5 minutes. Now, I don't generally like to enter stocks within the first 5 minutes, and that's because there's usually a lot of volatility and fake outs or fake breakouts in those first 5 minutes. So I like to give the stock 5 minutes to settle down, make a range, and then enter. Also, the first 5 minutes is usually when retail traders are most active. So there can be a buying frenzy and the stock just fades for the rest of the day if institutional traders don't follow through on that buying. So in 99% of cases, I would wait for the first 5 minutes before I enter a stock. But the only times I would make an exception is if we're in a raging bull market or there's a really strong catalyst on that particular stock or the entire market as well. In that case, I might enter after 1 minute, which is at 9:31 instead of 9:35. So sometimes, because of me waiting for the first 5 minutes, what happens is the stock breaks through that line of resistance, which, if you remember in Gato, was this line within that first 5-minute candle. So what do I do in that case? Very simple. I do the same thing that I do for gap ups. I wait for that 5-minute range high to be taken out and then enter the stock. So in this case, this was the first 5-minute candle. And as soon as the high of that candle was taken out, I entered. Okay, so that is the second possible scenario. If that range or the pivot line or the resistance line or the previous day's high, whatever you want to call it, is taken out within the first 5 minutes itself. You do the same thing and you enter on the 5-minute opening range high. Now the third possible scenario, and this is the one I prefer, is that the stock stays below the H1 for the first 5 minutes. H1 is the previous day high. in case I didn't make that clear earlier. So the high 1 day ago. And this is these are the commands that we use when we're coding on TC2000. So I just like to use the same ones when I'm referring to them. So if the stock is opening within the range of the previous day's candle or gapping down, then how do we enter it? If and when it takes out the pivot line. Okay, so this was the example of BMEA yesterday. This stock, this is the 5-minute chart, right? So this stock opened here. In the first 5 minutes, it was doing nothing. It just opened at this level within the range of the previous day's 5-minute candle. Sorry, but within the range of the previous day's candle. Then all you do is you can put an alert or a buy stop at the pivot line so that if and when throughout the day it does take out that pivot line, you're either going to be alerted of it or you're going to get a fill. So this one is my preferred method because you get to buy at exactly the pivot line and you get some time to plan your entries and see how the day is progressing without having to pile into the stocks in the first 5 minutes. So these are the 3 possible scenarios in the morning, every day, right at the open. And based on how the stock is opening and based on how it does in the first 5 minutes, I decide which entry tactic to use.